Good afternoon, friends and traders. I am Dan Hodgman, and welcome to the Market Recap. It is Monday, April 19th. I'm glad to be back. Last week, I just had a busy week. I had a lot going on, and I do apologize. You guys never saw my face. Hopefully this week we can get caught back up on these markets. It was such a busy week for me last week. I barely even looked at the markets. So it was like having a week off. I'm seeing things nice and clear here today. And man, oh man, am I excited to kind of go through some of these markets. Crude oil fell into a relatively tight range, but I'm excited to kind of show you guys some tools to utilize when helping us understand these multiple day ranges when, yeah, we're not checking prior day highs every day. We're not checking the prior day low. How do we determine that range? Where do we look for opportunities? So I'll kind of show you some of that. Stocks broke, led by tech. Tech taking a relatively big hit. There's so many connections to it. And I think one that's a prime example is you look at something like Tesla, right? Tesla has a hefty amount of Bitcoin. Well, Bitcoin, we know, had a wild week last week. Coinbase went public. They had a big opening. I think they're down about 3 or 4% here today. But Bitcoin hit, I believe it was $64,000 last week. Yeah, it looks like $65,000 a coin last week. We opened last night, and this is just why trading this market right now is just not applicable. It's not safe just yet. We kind of closed Friday at 61,975. We opened up last night around 50, we're just going to call it $57,000. So massive break off the open, and that market continued to stumble here today. Well, if Bitcoin holds a lot of, if Tesla holds a lot of Bitcoin, when Bitcoin takes a hit, so does Tesla. And then where does Tesla fall? Well, Tesla falls into the indexes, and then the indexes take it. It's just a total ripple effect, and it's things that we just got to be conscious of. Obviously, we know Bitcoin's coming out strong here, or the CME's coming out strong with Bitcoin when we get the micro coming out, I believe, May 3rd. Don't know the date off the top of my head. It's coming out soon, and that'll be interesting. Could bring in some more retail opportunity to trade that market. So I'm excited to see how that affects the cost of Bitcoin. Is it going to send Bitcoin higher? Is it going to send Bitcoin lower? Because more retail people that have a small amount of Bitcoin are utilizing it as an opportunity to hedge their positions. A lot can happen, and I'm excited to watch what happens there. So we have the equities taking a little bit of a break here today. Gold, we had a big, strong move in the overnight session, rotated back over here during the London session, but pretty much throughout today's regular trading hours, pretty much a dud of a day there, really inside, and the same goes for the euro. 10-year note breaks all the way down on the 30-minute chart, breaks down to that 200 period moving average, bounces off it, gives a move right back to settlement price, and comes right back down to that 200 period moving average. Those are a couple things we'll take a look at here today. News-wise, not a whole lot to touch on. Pretty quiet across the board here today. Haven't seen a whole lot come through. Nothing wrong with that. We got stocks, like I said, down, and there's a lot going on there. But Dow's looking at about 130 points down. S&P down half a point, and the NASDAQ down 1.1%. Yields are up just slightly. Nothing worth writing home today. The 10-year yield is up 0.028. And the 30-year is up 0.032. So we've got some movement there. On that note, guys, let's go ahead and take a look at these charts and see what we got going on here today. Felix, Tanya, Bill, and Emma, good to see you guys. Thanks for joining in. As always, we're going to start with our crude oil market here today. So here's what I did for myself this morning when I'm looking at crude oil. I decided to noticing that we have really pretty much traded with inside of a range for the last few days. When the market is trading range bound, I'm going to stick with that until it tells me otherwise. So I decided to put up a volume profile strictly based off of the time that the market has traded in this range over the last few days. And I basically went from last week when we entered into the range until right before today's open. That was how I was looking at it. And for me, that's where it created opportunity. I've got the value area lower of those 4 sessions, or 3 sessions here at 62.93 with value area high up here at 63.45. Those are going to be areas I'm going to continuously look for opportunity with point of control right here where today's value area low is right at 63.20. So I'm going to utilize that higher volume profile, those value areas, to continuously look for opportunity. If it's catching a move off the low, if it's taking a short off the high, if I'm looking for opportunities as this market approaches, absolutely, as we continue to trade here today, things slightly adjusted, but we're really holding strong right up here at that 63.46. We're right where we're trading right now, 63.50. So some good opportunity across the board in this market on a relatively tight range day. You probably had to look for that move off the low side prior to the open. You had one good chance as this market rallied up to the high side of that value area. And we got to keep in mind, it's just value area. There's still plenty of opportunity outside of that. Remember, this value area is strictly 70% of the day's volume traded, or that selections volume that's traded. There's still 30% of the volume is traded outside of that. So we have a lot of area to look for some opportunity as this market continuously approaches that prior session or section or area that traded above that value area high. And so those are things that we want to be cognizant of as the market approaches the extremes. Next, let's go ahead and look at the S&P 500. Market never really made the move back towards settlement price of 41.76 quarter, 41.76 quarter. Market never made the move all the way up there. Pretty much once you start to recognize off the open that the market is not closing the gap towards settlement price, we're going to look for that market to rotate in the opposite direction. Look for it to rotate lower. Obviously, we opened up with a gap last night. Market did close that, so we closed that initial gap from Friday's close into last night's open. That gets closed. We're comfortable with the area traded up above. It's good opportunity to start to look for this market to rotate lower. Where are we looking for our opportunity here? Well, we have to find those points of strength in a downtrending market. Remember, we closed that gap. This market has chose that direction. We need to trade into that direction. We don't want to try and pick the bottom, because if we start picking bottoms, that's when we're going to be struggling. So we had one great opportunity here today, right around 10 o'clock this morning. Pulled back just a little bit, came right to that swing low from the overnight session, and boom, great opportunity to take a well-managed short and continue this direction lower. Next, let's go ahead and look at the NASDAQ. NASDAQ's been a volatile market. It is a difficult market to be trading right now. We got gaps on the spreads on the bid and offer during regular trading hours. You've got to be thinking longer distance. Where can this market go, and how can I get into that with managing my risk? Right now, I'm going to stress looking at something like the S&Ps. If you want to trade indexes, trade the S&Ps with the way the NASDAQ has been trading. We're starting to see the volume really come out of the E-mini NASDAQ and move into the micro, because the micro is allowing bigger opportunity for people. So just something I can't stress enough when you are looking at this market. Market, just like the S&P 500, opened up, made an initial attempt. We came right to those moving averages that we've looked at quite a bit. And as you guys can remember, I'll just pull them up here so you can see them. Our red one here is our simple moving average. It's a 20 period. And our green one here, why isn't it showing me the red one there? All right, weird. For some reason, it's not letting me pull up my other moving average there. Try and grab it somewhere else. There we go. And that exponential moving average here, again, 20 period. Those tend to be the 20 period moving averages, are what I'm looking at pretty regularly when it comes to looking at the equity markets in a shorter time frame. And that's really where I saw the opportunity here. We approached Friday's value area low. We approached both moving averages. We moved through that exponential right to the simple moving average. From there, the market broke down really nicely, and that's where I'm looking for opportunity. That, to me, is where a great opportunity in this trade is coming. we've got two areas to keep in mind. Remember, when I talk about markets, when I look at levels, they're not finite, they are areas, and every market's going to be a little bit different how we talk and look at these levels. I consider markets elastic, looking at them like a rubber band. Certain markets are going to be a stiffer, tighter rubber band. Something like the NASDAQ is going to be a very loose rubber band that will stretch through a price pretty drastically, and we may start to think that that level is no longer valid, but it'll spring right back. And that's something we want to be thinking about when we are looking at markets. How is it? What's the elasticity of this market? Does this market, how do levels hold in this market? And that's something, to me, you have to be thinking about with every market that you're trading. And again, the NASDAQ has the ability to stretch through that price or through that level and come right back to us. So you don't want to get caught in that. Next, let's go ahead and look at the gold. Like I said, gold during pretty much regular trading hours. We got the move last night, and since then, it's been a really tight range, especially after John talked and after lunch. There's not much to say. I mean, we floated from 1770 up to 1772. Really tight range there. I don't have much to say on that. And the same's going to go here for the euro. Really tight range. Here was the opportunity that I see a little more opportunity when I look at the euro. Market has been trending higher. There's no question about that. This market has been directional into the upward direction, right? So what are we looking for? Well, if you miss the weakness in the overnight session to catch the big move, once we opened up, we started to see sellers die out. We started to lose sellers here right around 9:30 this morning. We start to recognize that. We need to be quick to react when we start to recognize sellers are being overpowered by the buyers, and we want to be in on those buyers and continue with direction of this market. We don't want to be getting in here and saying, oh, trend's over, I'm going to short this to see if it runs to settlement price maybe. It's not a realistic move when the market is so far away from settlement price. So we need to be thinking that bigger picture. What's bigger picture? Well, we know this market over time has just been maintaining. Whoops, we just picked up a. I'm going to move that one. We know this market has been maintaining directional move to the upside. We want to get involved in that. We want to take opportunity there. And so make sure you're always thinking that higher time frame, reminding yourself, what is the higher time frame of this market and where do the opportunities lie inside that? Lastly, let's go ahead and look at the 10-year note. And like I said, 10-year note opened up this morning and it broke. And this 10-year note, a little bit less of a moving product, like something like the NASDAQ when we look at moving averages. So we've got here the 200 simple moving average period, 200 period on a 30-minute chart. This is not the 200-day moving average. It's a 200 period moving average on a 30-minute. So market opens up, breaks down right to it. And this is a great opportunity to start to look for a trade. Where are we going to run this to? Where's our eyes going to be at? Well, we've got some great opportunity up above. Friday's settlement price of 132.12 and Friday's point of control 132.11. So we've got great opportunity to look for this market to retrace up there. What do we say with yields? We saw yields were starting to climb a little bit here today. Typically, that's going to send people a little bit of concern and send them lower. But we also noted they were not huge moves on the yields, and this market still held below settlement price and is going to settle lower on the day. So you've got a lot of things to take into account there. To me, great opportunity. We can either catch the long down here off of a 200 period moving or 200 period simple moving average, or we can start to look for a short up here as that a market approaches value or point of control from Friday or Friday's settlement price up here. Again, 132.12 to 132.11. That was the area. We can look for a great short there. And where's our target in that market? You know where I'm looking. We've got a possible swing low, which meets right up here with that 200 period moving average. Why not take an opportunity on that one? All right, everybody, those are our markets here today. Sean and Holden, good to see you guys there. Couple things to note. All right, so we touched on Bitcoin. Bitcoin took a little bit of a tumble. Once again, that Bitcoin price, whoops, I just minimized it on me here. Remember, we bought Bitcoin at 34,515. So, yeah, we got that gap lower off the open yesterday, but still good money in that one. Right now, trading 56,050. So we got $22,000 just about in our Bitcoin buy from the beginning of the year. Speaking of our buys, how's our Airbnb stock? Well, a little bit down here today. Opened up right around 178 and it broke down to 174.60. Again, we bought that at 148.30, so we're still in the money comfortably. Still great return on a stock over a couple months like that. Better than any sort of savings account. So we're making some good money there as well. A couple other things that we tend to keep an eye on. We love to see this GameStop, which GameStop all over the place last week. So last week we took the tumble down to about $135. We got a little bit of life here today as CEO has stepped down. And we got a little bit of life there. So GameStop up at $164.37. And our Tesla stock, like I said, down a little bit. Opens up around 725, down at 714, but traded as low as 600. And what was it? $692. So big break there. Lastly, VIX continues to stay steadily under 20. We're sitting at that 17 mark. Pretty darn quiet. It's been a while since we've been down here this low. And just for perspective, it's been about since February of 2020 that we were in the 17 range on the VIX. So something to keep in mind. Markets are going to get a little bit tighter. Volatility's starting to slow up. We as traders need to be prepared for that and recognize that just because this last year has created huge directional moves, a lot of volatility, that needs to get out of our head. We got to recognize each and every day is going to be different. Manage those expectations. Because we did something last year does not mean we can replicate this year. It's the interesting thing about trading, right? Most jobs out there, you get your 8% raise every year. You're going to continuously make a little bit more money, a little bit more money. Trading, not the case. Just because you made something, let's just say you made $100,000 last year, does not mean you're making that kind of money this year. It's all dependent on what that market gives you. And if you come in expecting to make the same thing you made previously, I can almost guarantee you're going to lose money. It's going to be a worse year. So each and every year, come in with managed expectations. Make sure you're slimming things down now that we're seeing VIXs are dipping lower. Volatility's coming off. We're getting close to summer too. So sit back, be patient, wait for those opportunities, slow down what you're doing, and look for the big opportunity to continue to make some money. Next, tomorrow, relatively quiet. We get the Red Book at 7:55 a.m. Central Time. Other than that, keep an eye on the news. That's the key one there. We'll keep an eye on the news, what's going on. Speaking of news, this date in history, in the United States, it's Patriots Day. On this day, oh man, everything's exploding on my charts, my screen here. All right, so it is Patriots Day, which is the day the American Revolution began, the Battle of Lexington. I think I've got a couple other ones too. Here we go. 1897, the first ever Boston Marathon was held. And that's about what I got for us here today. Raven, good to see you. Vlad, I agree. If you did well in October, don't expect the same quality volatile market in the summer. Absolutely. You've got to always be prepared for that. Trading ebbs and flows. There's goods and bads. It's not the industry to get into if you're expecting a paycheck every 2 weeks on the 1st and 15th or every Friday or once a month. There's opportunity for that, but you cannot come into this industry with those types of expectations. It's going to be detrimental. That's the tough part about this. You have to pay yourself when the opportunity presents, and you have to be willing to say, I am going to avoid paying myself this week or this month because I've not had the greatest month. I want to keep the capital in my account so I can continue to trade. Sean, when does Coach T launch? Keep an eye on everything here this week, Sean. It'll be keep an eye on your emails and everything this week. And Rick, good to see you. Summers are definitely usually slower, no doubt about that. Now we say that, but I feel like the last 4 or 5 years, the summers have been charged. We had a lot going into the summer that just continued. So that's always the question. Is that going to happen this summer? You come in with the expectation summers are going to be quieter, at least Fridays and Mondays for sure, more often than not. There's no doubt about it. You got to think about it. The institutional, the big guys, they're all making long weekends for themselves come summertime. And, well, don't blame them. I'm doing the same thing. So just something to be prepared for. All right, on that note, guys, I'll sign on out of here. John will be back tomorrow morning, 8 a.m. Central Time with the market recap or market forecast. So until then, and by the way, tomorrow, Coach's Playbook, 11:30 a.m. Central Time. Pretty exciting one. Kind of went on a tangent here today about withdrawals. Our risk manager is going to sit down and kind of go through his little TED Talk on withdrawing and paying yourself. So until tomorrow, you guys all have a great day. Stay safe, wash your hands, trade smart, and trade well. I look forward to seeing you guys in the markets. Take care, everybody. Bye-bye.